is James Northcote. I'm a principal in business advisory at William Bark, and I've been speaking to Jordan at Osveg, who commented that what you, his members, really needed is some practical advice around what tax incentives might be available as a result of COVID. William Bark has a proud history of supporting agribusiness in South Australia, and experience tells us our clients want us to strip away the technical information and help you focus on what you need to consider in order to maximise your entitlements. Well, JobKeeper, you would have heard a lot through the media, and what I want to do is break it down for you and make it easy to work out if you're in or not. So the first thing I'd like you to do, please, once this video is finished, is check your March turnover. Check this year, compare it to last year. If you're more than 30% down, you're in. Now, if you weren't in with March, check April. April this year against April last year. If you find you're 30% down, you're in for the full period. Now, if you're not eligible for March or April, keep looking at May and June and so on until you find you qualify. So what we know about JobKeeper is the earlier you qualify, the more JobKeeper payments you receive. This scheme ends in September, and so there's a maximum claim period of 6 months. So if you start now, you'll get 6 months. If you start a little bit later, you will get a bit less than 6 months. What we're hearing from so many businesses, especially those involved in primary production and agribusiness, don't think they are eligible. Now, when we talk our clients through the turnover tests, many get a pleasant surprise to find that they actually are eligible. It doesn't actually matter why the turnover drops. Could be drought, could be coronavirus, it could be some other means. It might even just be timing. But the important thing is it doesn't matter, and if your turnover's dropped compared to last year, you're eligible. Now, those who had a terrible year last year with their turnover might have been due to drought or natural disaster. There are alternative revenue tests available to help you assess your JobKeeper eligibility, and I'd suggest that you look into those if you need to. Once we've established that your turnover has dropped, we then need to consider how many payments your business might be eligible for. Now, there's a number of technicalities that go to determining eligible employees. Not too bad, but I don't want to go into those now. I really want to focus on some general rules. First one being permanent staff. They're eligible. If you have casuals that you've employed regularly since before March 2019, they will be eligible too. Importantly, business owners, many of whom are not actually employed by the business, one business owner per business will be eligible. I would encourage any member to get in contact with me or their accountant to help confirm eligibility and also to assist with the administration of dealing with this. We need to make sure that your employees are accepting of the JobKeeper payments. There is a form to fill in. You need to register with the tax office. And importantly, you need to correctly process your payroll, because that's what tells the tax office how many people they need to pay you, the business owner, $1,500 for, to make sure that's done correctly. So if people want to access the full amount in a timely manner, I would suggest that you act before the end of the first week in May. So to briefly summarise the actions that I would like you to go through is to please check your turnover. Secondly, compile a list of your employees, their salaries, their employment status, and when they started with you. And finally, talk to me, talk to your accountant to help assist you with registration and dealing with the other administrative aspects of the JobKeeper scheme. depreciating assets are another key pillar of the government's response to coronavirus. Many agribusinesses and those businesses attached to agri have been less impacted by COVID than others, and we do know that agribusiness particularly has a strong willingness to continually reinvest in their business to make it stronger and more efficient. The government recognises agriculture has a huge benefit to the broader economy and have announced two key incentives. The first being an immediate asset write-off for assets costing less than $150,000 and bought before June 2020. The second initiative is a 50% bring forward depreciation for assets costing more than the asset write-off threshold that are installed and ready for use before June 2021. Importantly, you need to have acquired those assets after the 12th of March 2020, which was when it was announced, and they need to be installed by 30 June of the relevant financial year. Now, it might be assets such as a new tractor or a ute that will cost less than $150,000. You have to have those, as I said before, installed and ready for use before 30th of June 2020, so 2 months from now. If you do that, you'll get a full deduction for the whole cost of the asset. So if you're thinking about buying something, don't do this just for the tax incentive, but do it because it benefits your business overall. But if you're going to do it, get onto it sooner rather than later so that it is on your farm ready by June. Now, if you have larger depreciating asset plans, capital investment plans, it might be that you're looking to fit out a packing shed or constructing some new growing tunnels. Again, they need to be acquired after the 12th of March, but installed before June 2021 and ready for use. If you can do that, you'll get a 50% deduction of the cost of those assets. Now, to put that in perspective, if you spend $500,000 on those assets, you'll receive a $250,000 tax deduction, and that's huge. In addition to those two items, there's something that's been around for a little while now. It's called small business depreciation. And what we find is that those businesses who elect to enter the scheme for the very first time often experience a large increase in their depreciation deductions that otherwise would be claimed in a later year. So not only do you get the benefit of deductions, stronger deductions around new assets, you might also be eligible for a bigger deduction in respect of assets that you've already held for a number of years already. So to confirm the key points around depreciating assets, firstly, it needs to be bought after the 12th of March 2020. Secondly, if that asset costs less than $150,000, you'll get an immediate write-off of that cost so long as it's installed and ready for use before June 2020. For those with larger capital investment plans, as discussed already, you'll get a 50% deduction of the cost so long as it's installed by June 2021. And finally, by entering small business depreciation rules for the first time, if you haven't done it before, you might receive a big one-off brought forward depreciation benefit. Most of my time talking today about JobKeeper and depreciating asset deductions. What I want to focus now on are some other benefits that a number of you will find beneficial that are part of the government's response to coronavirus. The first is the pay-as-you-go withholding rebate. And this applies to all businesses, regardless of turnover, regardless of profitability. You must employ people, you must pay those wages, and claiming the pay-as-you-go withholding rebate will be processed automatically by the tax office once you lodge your March BAS. So those who have already lodged their March BAS would have seen this come through already. Those who have not yet done it, I suggest you do it so that rebate can find its way back to your business. In addition, the ATO are allowing pay-as-you-go instalments to be very down this year for those businesses impacted, and you may also find that you can claim a refund of any pay-as-you-go instalments that you've already paid. It's really important to remember though that if you are in a taxable position, this is a deferral only. You do still have to pay the tax, and you may have to pay it at a time that doesn't work for you. So I would suggest, if you're still actually a profitable business, to keep paying your pay-as-you-go instalments as normal. Further, the South Australian State Government have announced a $10,000 payment for businesses impacted by coronavirus. It's really important. This one is only eligible for those who are able to access the JobKeeper payments, which we talked about earlier. And secondly, it only applies to those businesses with employee wages less than $1.5 million. Because those with more than that have received a benefit from the state government through payroll tax reductions. But this $10,000 payment from the state government is aimed at those smaller businesses who may not have received much other benefit from either the state or federal governments. So $10,000, but you must be eligible for JobKeeper to access it. And finally, the tax office and the banks are offering support as well in respect of repayments. So the ATO have some very accommodating payment plans available. These do attract no interest, and they can, for some, defer payments out to September. You do need to call the tax office and explain your situation, explain why and how you've been impacted by coronavirus, and hopefully they'll assist you with a payment plan. I've certainly done it for some of my clients. The banks too are helping out, so there is additional funding for those impacted by coronavirus, as well as payment deferrals. Note they are deferrals and that the loan still needs to be repaid at some point. I hope that you've gained some good practical information in respect of these incentives today. And please, if you have any questions or would like to explore any individual scenarios with me, my details are on the screen. And I do hope to see you at the next AusVeg event real soon. Thank you.